Hey, it's Drew here at LTC Tree. I'm with my cousin and business partner, Derek, and today we are going to talk about Securian's newest SecureCare 4. Derek has really been trained up on it, so I'm going to be asking him some questions. I've read a lot of the training docs as well, but we're going to approach it from a newbie perspective. Explain it to me like I'm five, Derek.
All right, let's get into it. All right, hey guys, I'm Derek, back for another video. So today we're going to talk about Securian, also known as Minnesota Life to some people. They rolled out their SecureCare 4, and what that is, it's a hybrid long-term care insurance product. And Securian has been a leader in this hybrid space for over a decade now. And what they did, believe it or not, is they added a couple extra benefits and they're not charging more, which when we were first discussing the anticipation of it, we were like, they're going to have to charge more in premium, but they actually did not. So what Securian's long-term care hybrid plan is, you give the insurance company either a one-time premium, say 100K, or paid over 5 or 10 years, whatever payment method you choose, it's paid off. And you have instantly probably a 3 to 4x leverage on your money. So that means if you put in 100K, you probably have 3 to 400K in long-term care benefits. And if you never need long-term care, they'll refund your premiums with typically a bit extra, like in the form of life insurance at death. They've been really good about having a cash indemnity plan. That's what the industry's kind of moved to. And what that means is, when you're 85 years old, you don't have to be scrambling for receipts to prove that you paid a home health care aide 15 hours for the week. They just pay you the cash. You can spend it however you want. So they really take the friction out of the claims process. And what they added here was, all long-term care policies have a 90-day deductible, or most of them do. The old Securian, it had the 90 days, but with this SecureCare 4, they matched what Nationwide does, is they'll refund you that 90 days on day 91 of the claim. So if your monthly benefit's $10,000, they'll cut you a check for $30,000 on day 91, plus the extra 10 grand for that fourth month.
Hey, let me stop you right there,
40
Derek.
grand.
Why do you think they make you wait 90 days only to pay it back to day one? And a lot of people ask me that question. I'm curious to hear how you answer it.
I think it's because they know, they're insurance companies, it's the actual numbers. They know that statistically there's going to be a certain percentage of people who die in that 90 days, and they're not going to have to pay anything.
Yeah.
I think that's why they do it. Because Lincoln doesn't have a deductible. Yeah. What's that?
I agree. Like my dad, he was in a nursing home 7 days. So
yeah. So
it's a lot of paperwork for somebody to just die.
Yeah, it's a nice. They didn't have to do it. They're not charging anymore for it. So it's a nice feature to add.
So this really brings them up to par with what Nationwide's been doing for 4 or 5 years.
Yeah. So if you spreadsheet it out, in most cases, Securian's at the top of the stack as far as premium dollar in to the benefits they're giving you. They also, we have a lot of international people from China, from India, from South America, all over the globe, who do want long-term care insurance, and they typically want a cash payment plan. Now, up until this new product, Bright House was the only one out there that paid 100% benefits in cash internationally. So now Securian added 100% benefits internationally. So they added 2 big features. And so they're really, I think they saw the business Bright House was getting and Securian was getting, and they just stepped up and added those 2 features. So now most of our businesses going towards Securian these days. What are you seeing with your clients?
Yeah, so one place where Nationwide has always been really strong is on the 10 pay. Have you run any Securian 10 pay options versus Nationwide?
I have, yeah. So Nationwide still has great rates. I'd say probably 65 years old and younger. Securian's kind of, if it's the older clients, they seem to be edging them out. But yeah, that's what our secret sauce is: objectivity. We'll meet the client, have a conversation with you, learn about you, and really figure out what's important to you. And then based on that conversation, we'll then go and shop our toolbox of companies and figure out which company is going to give you the most benefits for the dollar put in.
All right, Derek, let's say that Securian and Nationwide, both A+ rated companies, let's say they're really close in price. How does someone decide which one to pick?
That's a good question.
It used to be it used to be obvious. You pick Nationwide because the things that Securian has now leveled up to catch up with Nationwide, they're both A+ rated. They both pay back to day one. Really, it's six one way, half dozen the other.
Yeah, I mean, it would. I guess we just have to drill down a little bit to the companies. Both are A+ rated companies. They both have similar contracts. I guess it would probably be, is international, is that realistic? Because most people aren't going to use the benefits out of the States. But if Nationwide had a little bit more per month in benefits, yet didn't have the full international, I might, and the person wasn't planning on going out of state or out of the country, might lean towards Nationwide. But it's really a case by case business or decision. So that's again, we're objective. We'll just lay them out for you. Here are the pros of this one. Here's the cons of this one, and let you judge for yourself.
Yeah, and rarely do they come in where they're like almost identical in cost. Usually there's going to be like a price difference that kind of pushes you over the edge.
Yeah, there's usually something where this is the obvious play in this case. I just did a Lincoln case just a couple of days ago, and it was just for whatever reason, this couple, their combination of factors led us for them to be at the top of the stack. And it's also going to be based on, person's health. That's going to come into it. I'm finding that Securians being a little bit more picky these days on underwriting than Nationwide. That has to play into it. This other couple, I had a lady who her BMI was higher. Lincoln probably has the most forgiving BMI of anybody out there. And one thing about, just an aside, is Lincoln doesn't have smoker rates. So if you're a smoker, you're going to get pay the same premium for their hybrid long-term care insurance, the Money Guard, with whether you're a smoker or not, versus the other companies will put you in a smoker rate.
All right, I think that's really helpful. So Securians really leveled up their policy. They've added more comprehensive international coverage. They've really enhanced the payback to day one after 90 days on the elimination period. That brings them in line with Nationwide and with Lincoln. All right, so if you're on the fence or want to compare these companies, just reach out to us. It's a simple phone call to our 800-800-6139. We'll put the number on the screen, or check out our website at LTC. I'd say most people probably like to go to the website and do a little looking around first, but either way, give us a call.
All right. Thanks, guys. We'll see you next time.